Hello, everyone, and welcome back to the Outspoken Market. Leandro Guerri speaking. I want to call your attention to an anomaly that I have detected early this morning in the options from the SPX that have the expiration next Monday, the 27th. If you see here, there are actually a couple of things. One, the call and the put walls, they are flipped. Normally, we have the put wall below or before the call wall and not the other way around. The second thing is you see that huge spike in the 7130 strike that we have, particularly for that call wall in comparison to all the other levels. If we look to the zero DTE, that it's the options expiring today, the 24, we see that one, we have 50%, actually way more than 50% volume on that particular strike. And the walls, they are somehow on the order that usually they should be, right? So if we ignore that particular anomaly on that strike, you would see that the other levels, they are on average that for something that we can expect few days ahead in comparison to this one. Now, this is really, really interesting because if we project these levels, the call walls and the gamma flips in the chart, we will have exactly that view. I highlighted here in orange that call wall expiring on Monday, so 3 DTE for the time that we are right now. And we will have, well, actually, the SPX has been ranging for the entire week after that amazing recovery that we had in the past one. And we can see that now the price will resist at this level until that volume from the open interest does not get consumed. We don't expect the SPX to go any further than that. Of course, the president may say some things, but there are the unknown stuff that can happen during the day. I'm speaking about, well, a regular business day where people are trading, doing whatever they have to do in the markets. So this guy naturally will be a huge point in the magnet for the SPX. The fact we had that switch in the order of the call and the put wall for the Monday expiration, from what I have observed in the past, it's on average a bearish signal because we have the protections from the dealers inverted. We are in a positive gag scenario, meaning the spot price it's above the gamma flip levels that are the white lines that we have over here, meaning that yes, each one of these call and put walls at the intermediate pin levels that I highlight for you in the analysis I do daily. And by the way, I forgot to mention this is for free, right? You just come to om-qs.com, go to the blog, and then you have access to that information published daily. So we indeed can expect a resistance coming from 7130, 7150, while the other way around, 7100 or 7100 and the flips, they will be support levels. Naturally, the range matches these levels, especially because if we take a look on the previous readings that we had, for example, let me pick up the one from yesterday. We see, right? So we are in a similar position. But notice the volume of the gamma exposure, they are not in the way it is projected for the next Monday. It's fair to say this is a dynamic environment because the dealers and the market makers they use options to hedge their portfolio together with their positioning in the spot because they will avoid the directional exposure. So this usually changes during the day. However, since we don't have that much time to monitor this every single hour, half an hour, whatever the frequency, because we have to do something else. And honestly speaking, it does not change that much because that picture, and I have been doing this daily since October last year, it does not impact that much what we have eventually changing daily to the first reading that we do early in the morning. So the numbers they hold, they stand to their positions and to the market reaction movement. So we can expect something into that direction. So that would be definitely a level to be seen. If we go to the broader picture, we can see that, well, now oil early this morning gave us a beautiful opportunity for a long position, which we already are, while the Nasdaq and the S&P 500, meaning the SPX, they are still ranging, but it's naturally a period with low volatility. So we need to expect them, or at least expect some movement during the market opening, but we are at the moment in a bullish situation. Of course, with these levels over here to be observed in a more conscious way. If you go to the crypto side, Bitcoin at the moment in very short term, 5 minutes, we are on a bearish position, while for the Dogecoin, and I like Doge not because I see any fundamentals on that, it's just because it's very volatile, and volatility is what matters for trading. While in the Forex, the British pound against the dollar, we are a little bit of recovering the bearish movement that we have, but yet red. So the market is favoring short positions. Whenever you see the blue one, it's favoring long positions, right? Again, I'm here on the very small time frames. So any type of trading that it's done in these intraday charts and levels, they should be extremely short. You may choose to follow the probability until it flips, that it's an option. But what matters is this is a regime detection probability tool on which, again, the blue favors long positions. So you can add any kind of setup that you want to the reading, and then the red one favors the short positions or the bearish point of view. Okay, so join our Discord community. It's for free. We can debate. You can take any doubts and questions for me in there. Have to help in terms of quantitative finance and AI. And take care, trade safe, and pay attention to this SPX level for today. So see you next time. Bye bye.